Hey Patrick,
Hey Mark, hi, how are you doing?
I'm good. How are you?
Yeah, doing quite fine. A little bit freezing right now. I just closed the window. But yeah, besides this, I'm doing pretty good, sleeping pretty good, and pretty pumped for this. So yeah, how was your week? How was your last 7 days?
Yeah, it flew by again, to be honest, a week in
Mm,
crypto. Um, there isn't much necessarily that I think of that really happened in terms of crypto. I mean, the market was a bit sluggish. I can't think of any like huge announcements or huge things that happened.
mm.
What about you?
Yeah. So for me, it's right now. I'm pretty healthy. I'm pretty happy, and I'm pretty thankful. So from a human point of view, I'm doing pretty good right now. I enjoy life, and yeah, the most exciting thing basically last week that I bought some presents for my from my sister and my parents, and yeah, this was the the what is it called, the peak of the last week basically. But besides this, nothing special happened, and yeah, I enjoyed the slower time of the year basically.
Okay, and any sneak peek of what you're gonna get or gonna give?
Ah,
Okay,
I don't know who's
maybe they
listening.
listen to. Okay, I don't know if they. Okay, it would be funny if they
But
listen to.
I have no clue what I'm getting.
Okay, okay.
Yeah. What
Nah,
about
it's fine,
you?
it's fine. Yeah, like I already know what I'm getting. I'm getting a set of speakers from Logitech, and I'm getting a Carhartt hoodie
Hmm.
to survive the cold winter here. Yeah.
Maybe a bit late if you get it on Christmas, right?
Well, there's still January and February.
Yeah,
It can
that's
be a lot
true.
colder than you think.
Yeah. Yeah. Yeah, great. So the last time we did our portfolio allocation was on the 5th of November. So our overall portfolio. Since then, quite a few things changed. I'm pretty sure that you have something to say about Illuvium. Yeah, do you want to start with giving an update about your current portfolio allocation roughly?
Yeah, sure. So, yeah, basically compared to a month ago, um, my BTC and ETH has gone down, and well, I gained a Solana allocation that I didn't have. And my Illuvium allocation has gone up quite a lot. I think from like
Mm,
roughly 1,000 to right 1,600 or something. So my portfolio, which was already a bit imbalanced in terms of Illuvium, became even more imbalanced. So last time Illuvium was 44% of my portfolio, and this time
mm.
it's 53% of my portfolio.
Wow.
So over half of is Illuvium.
Oh, from 44 to 53?
Yes.
Okay.
And my Solana allocation, because I started yield farming on Solana, I went from 0 to 2%. And my Bitcoin allocation dropped from 41 to 33. A-
Wow, wow, wow.
And my ETH allocation increased from 9 to 12 because I also had to get more ETH to enter the ILV, the pool,
Mm.
the ETH ILV pool, basically. So, so yeah. Um,
So so did I get it right? So about 50% Illuvium,
mhm.
about what did you say? About Bitcoin 25% roughly?
Now 33%.
But it dropped, right?
Yeah, it dropped from 41 to 33.
Ah, 33, okay. And then a little bit of Ethereum, a little bit of Sol. Okay. Anything else, or is it just those
This is pretty
four?
much just the rest is just
Mm,
dust. So this is pretty
mm.
much my portfolio right
Wow,
now.
so over 50% in Illuvium.
Yeah, it's quite heavily exposed.
How do you feel about this? Do you feel safe, worried,
um,
awesome?
yeah, I feel pretty good about it. So far, Illumina has done quite well. It has outperformed ETH and BTC, and yeah, maybe Solana from a certain period, but yeah, it has done pretty well. I am a little bit concerned about the unlocks next year.
Mm,
Yeah, but yeah, so I'm just expecting that it will start dropping again next year. But until then, there's
mm.
still a couple of catalysts. So there's the lens sale coming up in December
Yeah.
or January, and then there's some avatar thing that they're selling like in also early next year, and then the game is coming out. So there's still like three more big catalysts that could increase the price before it may
Mm,
dilute again. But yeah, we'll see. But so far, I'm feeling pretty good about it since there's not
mm.
much else. Yeah, I would allocate it to be honest.
Ah,
Like ETH
this
and
was
BTC are a little bit underperforming lately, so
yeah.
yeah,
BTC is quite boring. But yeah.
yeah. So yeah, and overall, the portfolio total value gained about 10% since last month. So
Wow. Okay.
so it still did a yeah, it still gained overall despite the despite the drop in ETH and BTC, but not like a
Mm,
huge gain, but still nice.
yeah. Nice. congrats. I hope this I hope this will yeah, keep going.
Yeah, so what about you?
Um yeah, the last time so at the 5th of November I was roughly 65% Ethereum, and I was roughly 25% BTC, 5% Sol, and the rest were 5%, so 65, 25, 5, 5 basically. And yeah, it changed a little bit, but not that massive. Basically, two things changed. So ETH has outperformed BTC a lot, and this makes me happy. um, so ETH has decreased to roughly 70%. So it's quite weird actually that I make some kind of fun in quotes about your alluvium, and then I'm sitting here with 70% in ETH.
Yeah.
And yeah, I think it comes down to conviction, I guess, and to your risk and reward um 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 what's it called? Your risk reward appetite. So I do have 70% in ETH. I do have about 23% in BTC, so dropped a little bit. My Solana got a little bit up to 7%, and the rest is 5%. And one thing hit hit the 1% threshold, so to speak, which is called DeFi chain. I talked about this. This is the one from Julian, right?
Okay. Yeah, I think you talked about it before. Can you
Yeah.
remind
So
us what it is again? Because it's not very like a very famous coin or something, I would
yeah,
say.
it's I don't would also it's like they are basically a Bitcoin fork, and so they use the Bitcoin chain, and they settle on the Bitcoin chain a couple of times, and they are basically synthetics but on Bitcoin. Are you aware what Stacks is?
Stacks. Mm,
Yeah.
no, no. What is
Okay.
Stacks?
Yeah, you can imagine it like this. So the protocol launched a year ago, and it's from Julian and his co-founder, a technical guy, and Stacks is basically synthetics on Bitcoin. So imagine you get your Stacks token in there, you can put them in a vault, and you can mint synthetic assets against your collateral. For example, you put in one DeFi coin. This is the native coin of the DeFi chain, and you can mint with a 50% loan to value ratio. You can mint a Tesla. So, for example, to make it a little bit more concrete for our listeners, let's say you have $200 worth of DFI, then you are able to mint up to $100 worth of Tesla. But I wouldn't recommend doing it exactly like this because the loan to value is the level where you get liquidated and you don't want to get liquidated. So from a capital efficient point of view, you need to put more DeFi into mint more. And right now they launched their synthetic product, and the price within 3 days doubled. It went from $2 to $4, and I don't know what's going on there, but right now it's a pretty big in quotes part of my portfolio. And yeah, it flies super under the radar. It has quite huge market cap because CoinMarketCap and CoinGecko, they are pretty cartel-like. So whenever you want to list something which is not a Turing complete, so ERC20 coin or stuff like this, they won't list it correct. So yeah, they have about a $1 billion market cap right now, so quite big, but not that super big. And it's yeah, kind of a gamble on Julian because Julian is a pretty awesome guy from my point of view, and it's a DeFi coin, and it combines the synthetic product side where I'm pretty confident in that this will gain traction. So yeah, this was my main change. ETH outperformed BTC, Solana outperformed BTC, and then the DeFi outperformed over the last 3 days basically everything.
Okay, wow. Congrats with the investment.
Yeah,
Um,
thank you.
yeah, but I've never heard of it, but is it like a layer two or something on top of Bitcoin?
No, it's a
A
sidechain.
sidechain. Okay, okay.
Yeah. So it was quite weird. So I got in at the day of the launch. It was not an ICO. It was more like a yeah. How I don't know the exact word. More like a token generation event, but not an ICO. It was I don't know the exact definition. But I got in at around what was it? 10 cents or so. 10 cents with quite of a small back. But remember back then a year ago or even more, it was kind of bearish sentiment. So it was quite big and yeah, so then now it shot up yesterday to $5, so easy 50x. And but yeah, I'm pretty confident that it could even go up to $20 if the bull run continues. So yeah, I think the main learning I get out of it is and this is something I would like to talk to you a little bit later on, is I think right now in the face of the bull run, it's super tough to pick projects which will do a 10x or even a 20x. And if you compare this to a year ago, it was quite easy, honestly. Uh, yeah. Um, I do have one question for your portfolio, which got me thinking yesterday evening.
Sure.
Um, so I was thinking about is my portfolio looking right now in a way which I wanted to. And I basically listed out a lot of narratives. Like I will give some examples. For example, I was asking myself, okay, am I fine with my allocations to layer ones, to NFTs, to crypto plus gaming, to DeFi, to layer twos? And I was thinking about which categories slash narratives are out there. And I was taking a look at CoinGecko, and they list out 66 categories. So this got me thinking, and I found one category where I feel quite heavily underexposed to a degree which where I want to change it. But first, I would like to ask you the question: do you see some narrative or something where you would like to allocate more of your funds into? Do you feel underexposed in some category slash narrative?
Um, I'm not 100% sure, to be honest, because like this year we've seen that layer ones, they generally outperform like DeFi protocols and even most other types of protocols. So um, there aren't that many categories that I want that I think will outperform in layer ones. So I think play to earn is an exception because that's a relatively new and up and coming thing. And if you think of the other big categories, I can't think of anything that is really that yeah that I'm really super bullish on. For instance, like personally, I'm not super bullish on DAOs. Um, I'm also not bullish on like insurance or maybe like audio kind of themes or maybe infrastructure. So yeah, I wouldn't say there's anything I'm particularly interested in right now, other than play to earn in general. Like I would like to diversify my play to earn a little bit,
Mm,
and also dabble into more chains and more layer ones.
mm. Um, yeah, this was one thing I was thinking when I thought about your portfolio. I would ask myself if I were you, what about alternative layer ones and also layer two exposure? For example, Avalanche or Matic and stuff like this. What do you think about this?
Yeah, I think Matic has gone up a lot lately. And Avalanche, of course, they had a huge run. Um, yeah, I
Yeah,
personally,
but you can take other layer ones. You can take Luna, you can take
yeah.
whatever you
So
want to.
yeah, I'm definitely interested in looking at more chains, basically. So I also maybe this is also for the next topic, but I also intend to diversify my yield farming a little bit to different chains, because even though the costs on Solana are super low, which I'm really happy with, the yields are not as great as I thought they would be. So I want to explore more chains and also maybe some more obscure ones because I feel there may be some good opportunities there. So in general, I would say I would like to get more allocation to layer ones and layer twos, basically gas tokens. And for the rest, there isn't really a specific ecosystem I would really like to invest in other than more play to earn.
Mm. And how do you go about this? Let's say, for example, you find some good yield opportunities on Phantom, for example. Is this the time that you will increase your Phantom allocation? So you basically increase it whenever you see an opportunity, or do you think there is a different approach to go about this?
Yeah, I think it sounds a bit weird, but it depends for me also a little bit on the yield differential. So let's say I bridge my stuff to Phantom and like let's say ETH becomes my base asset of Phantom, right? Then I can of course deposit my ETH and then borrow things against it and try to yield farm with that. Depending on how good the yields are with that, I will do that. And if the yields are like significantly better with Phantom as a base pair, then I will start allocating more to Phantom, for instance. So I think I will play it like
Mm.
this.
Okay, interesting. Yeah, maybe we can talk about this next week. I would be really interested about your experiences and your research on the layer two slash layer one ecosystem beside ETH, because ETH is just doing with ETH job. He's basically doing everything to price out retail, and I think we are retail. So, yeah, interesting.
Yeah. What about you? Anything remarkable that happened?
Um, yeah, I have quite a lot of topics that I would like to discuss, and um, this goes hand in hand. But what I just um scratched a little bit with my question to you. So I'm getting more and more excited about this whole crypto plus gaming narrative. I'm not quite at the point that I can nail it down to. I'm getting excited about play to earn or NFT because it's it doesn't fit with me 100%. But I'm thinking a lot about how can I set myself up to be in a good position if a crypto game gains traction. So my theory, for example, is like this. So quite a few of games are getting some kind of traction right now within crypto. Let's take Axie Infinity, for example. They have a running game. It's quite awful from my taste. It's not a AAA game or stuff like this. And then there are those other games which have potential, like Illuvium. But I ask myself the question, um, is there a game within the next 1 to 3 years which will be able to go mainstream on Twitch, has 25 million players, and is also linked to crypto? And I'm asking myself, imagine that there is this game which is not out right now. It's not even a thought right now. But tomorrow, one dude wakes up or one girl wakes up and says, "Okay, this is my idea, this is the game, and in 1 to 3 years, this will be an awesome game with a lot of Twitch viewers, all the stuff." I'm asking myself, how can I set myself up right now in order to, um, yeah, participate on this traction? And I don't have a good idea about it. So I'm basically looking for some kind of picks and shovels in quotes. How to go about this right now. I'm set up in a way that if a game gains traction, most likely the crypto ecosystem will gain traction and awareness, and people will buy ETH, people will buy BTC. So my portfolio goes up a little bit, but I don't feel that good about having higher exposure, and I'm struggling a little bit with this. So this is something remarkable that came up into my mind. How do you think about this? How how would you position yourself for a game which goes mainstream within the next 1 to 3 years, or do you think you are still in a good position because you hold a lot of Illuvium and ETH and BTC?
Um, yeah, I mean, I don't think BTC will have a lot of, correlation with play to earn necessarily. Maybe ETH will have a little bit. I think Illuvium, I think it will have some correlation because, for instance, when Facebook Meta was announced, a lot of tokens went up. Basically, like the whole the whole category of play to earn and metaverse tokens went up, including
Yeah.
Sandbox, but also Illuvium, for instance. So I do think there's a pretty good correlation between, for instance, Illuvium and the whole play to earn market cap. But yeah, with regards to picks and shovels, um, I have a hard time thinking of picks and shovels that are really picks and shovels for play to earn games because um, you have you have, for instance, like the software, for instance, Unreal Engine. That is, of course, a picks and shovel for play to earn, but it's a picks and shovel for the whole gaming sector as a whole, and even partially correlated to probably graphics cards sector, etc., etc. So, and then you have also maybe some infrastructure for blockchains, so to enable regular game makers to
Mm.
make a crypto game. I think those kind of things can do well. Um, but yeah, I don't think those things are really kind of sexy. And um, I think with tokens, you also need not only a good narrative, but also a good community, and also it needs to go a little bit viral. And I don't see like a technology going viral necessarily in that sense. So let's say you make
Mm.
really good blockchain backend software. I don't think a whole lot of people are going to get excited for that, and a token of that will go up a lot. So yeah, I do think there is something called PYR. Um, I think Carter is very bullish on that one, and I think it's also kind of an infrastructure play to make it easy to make play to earn game.
BYR?
Yeah, PYR. I think it's gone up a lot though, but yeah, PYR. And you can also maybe consider IMAX, of course. It's a layer two that is specialized
Ah, good
for
point.
NFTs and gaming, and I think that is going to be definitely a blue chip with high
Really
correlation.
good point.
And also, otherwise, you could also think of maybe Engine coin. I think Engine is like, well, I don't know too much about it, but I know that the XE guys are putting in a lot of effort and development effort and money into it to make it good. So it could also be like a competitor to IMX. Um, yeah, and for the rest, I still think, personally, I think a portfolio of play-to-earn games will outperform a portfolio of play-to-earn infrastructure plays. Because, yeah, just because they're way more sexy and they have way bigger communities and stuff. But maybe, yeah, maybe I'm wrong. But so I do think Yield Guild is also possibly a good option. And still, I think MVI also still remains a good option, even though
Mm,
it's, I understand that it's a play on games and it may have some bad games, but I think the good games will, do so well that they will way outperform the bad games.
mm. It's interesting. Hmm. Yeah, I could comment on a lot what you just said, and um, while you were talking, a thought came into my mind. Let's say, for example, there is no picks and shovels right now, some really good picks and shovels. Because we have no clue if they build on IMX, for example, or if they will use Engine to run their or to create uh, their thingies, their swords and stuff like this. Engine is basically like a base layer for tokens. And my thinking is, um, let's say, for example, we there is no need or there is no possibility to nail the first um layer of consequences. So the first, I mean, let's say there is a game built on IMX, for example, and the IMX token goes up like hell. The chances for this are quite low. But I'm thinking the following. Let's say 25 million people enjoy a game, and there is no way to invest in this game right now, right? Just as a theory. Um, if those people are done basically with buying their, let's say it ABC token, because ABC token is not out right now. What is the next thing that they will take a look at? And this is something you could bet on possibly. So I'm thinking along these lines. Let's say people buy the ABC token, and then they say, okay, what do we buy next? I'm pretty confident that those gamers, those people who want to get rich quick, there will be a lot of hype. They won't buy BTC. I'm pretty confident that they won't buy BTC. Ethereum is getting more and more uncool in quotes like BTC. I'm thinking, could they buy something like Doge, like Shiba Inu, like those like those meme coins, which are super volatile? So this might be the second layer of consequence which people buy, or is this just a random thought, super speculative? There's no real data or facts to back this up. Yeah, what do you think about the theory? What could be the second thing that they will buy after they bought the ABC token?
Yeah, you bring up something that yeah, you sparked a thought in me that is kind of similar in your direction, but also a little bit different. Like there's right now gamers that buy like Call of Duty each year, right? Or they buy whatever game each year, like let's say Assassin's Creed.
Mm,
And let's say each year there's a new token. So Call of Duty comes out and then you have a Call of Duty token.
yeah.
And if you're a token holder of the Call of Duty token, you get special benefit, right? You get a nice suit, you get I don't know, you get something. So people want to hold the Call of Duty token for as long as they are gaming with the Call of Duty game. It could be that next year, there will be a new Call of Duty game and it requires like the new Call of Duty token.
Mm,
And then people will sell their old token and get their new token to get the new benefits from basically the new token. So it could be actually that once they have their ABC token, they will just move on to the ABC2 token and then the ABC3
mm,
ABC3 token instead of putting it in Doge temporarily.
mm. Yeah, I think that game studios won't do it like this, but I have no idea. I think they would build basically their which company is building Call of Duty Ubisoft? I don't know. And they have their Ubi
Activision, I think.
token. Sorry again, please.
Activision Blizzard, I think.
Activision. Wow, Blizzard. Wow,
Activision Blizzard
awesome.
is like the same company. I think they are making Call of Duty, if I'm not mistaken, at
Wow.
least.
Boah, damn, they must have made so much money over the last couple of years. But yeah, maybe this discussion leads nowhere for now. But this is things I'm interested right now. How can I increase my portfolio allocation to roughly 1 to 5%, so pretty substantial. I'm at about 0.001% right now, roughly, because I do have a little small tiny bag. I can hide it in my sockets of Aurori. So yeah, it's I'm super underexposed, and I would like to increase it. And the theory behind this is the following, and maybe this is the TLDR for our listeners. So I'm in crypto right now for over 4 years, and um, 2 years ago, people were laughing about DeFi. They were laughing at it. They were thinking like, "Damn, this makes no sense." Blah 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 blah. Finance decentralized. Blah 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 blah. Makes no sense. Yeah, a year later, there was the DeFi summer, so it got really hyped. And if I compare this to a year ago, when the first NFT hype basically popped up, people laughed about it. They were thinking about, they were not getting the whole concept. Me neither. I was thinking like, okay, ha ha ha. People are putting audio and video on the blockchain. They make NFTs. They sell them for 20 ETH. Who idiot buys it for 20 ETH? A simple song. And I'm pretty confident that this was a stupid buy. But nevertheless, um, humans are getting creative and they build on some simple concept and make something great out of it. And I think my theory is the following, that a year ago, people were laughing about NFTs. Right now, they are at the point where they are pretty confident that NFTs could be legitimized, but there is no real use case. There is no real use case which has traction right now. You can argue that the NFT profile picture stuff has some kind of traction, but it's just prestige, and prestige has also value. The play to earn stuff is at its early stages, but I'm thinking that right now, n totally uncorrelated to if we are on a bull market or a bear market or whatever will come, I think right now is a really good time to start DCAing, so dollar cost averaging into the crypto plus gaming space. And yeah, this is a journey I want to go down, and maybe next week I can give our listeners some more concrete things what I will do. And yeah, this was something which got me thinking a lot. Yeah, do you have any last comments about this, or should we continue to the next topic?
Um, yeah, I just wanted to say that Arthur Zero X is also like heavily invested in play to earn games right now. So
Mm,
not just Axie, but he's like diversifying and entering a lot of the new play to earn games on Solana, for instance. So I think he's also thinking longer term, you know. So he probably hopes that in a couple, like in a year or two, when the games come out, that it will reap massive rewards. I do
that's
think,
really interesting.
yeah, I do think games in general they take a lot of time to build, especially really good games, you know. So. Um, yeah, if you invest early in it, it can take years before the game actually comes out. So just something to be aware, but I think
Mm,
it could still pay off.
mm. Yeah, I will take a look at other directs. Thank you for this. And for our listeners, just as a quick explainer, why I'm so really excited about what Arthur Zero X is thinking about this. Arthur Zero X was basically able to bet on DeFi when everyone laughed about it. He built up quite huge positions in synthetics, for example. And yeah, right now he's managing a fund between a couple hundred billions or a billion. I'm not quite sure. But yeah, if he thinks this could be a potential next bet, I think he has a nose for this. And yeah, thank you for this. I will take a look into it.
Sure, welcome.
Okay, okay. I do have a couple of more topics which are remarkable to discuss. What about you?
I just have a couple of short points to mention, not really to discuss. So first of all, there's now a bridge between Solana and Phantom. I thought that was kind of interesting.
What is
Uh,
it called?
it's called All Bridge.
Allbridge. Ah, okay.
And another thing that happened this week in terms of content is that Messari, you know, the data analytics firm,
Yes.
they published their crypto thesis for 2022,
Hmm.
and this Messari crypto thesis, that is exactly what got me into DeFi last year. So it is a really nice document made by the head of Messari. I'm blanking on his name right now, and it's about like 100 pages, you know. But it's really good.
Wow.
So this is really how I got into DeFi last year. So I'm really pumped to read this, and also they're also going to do some webinar or something about it where they have
Oh,
discussions
okay,
about it and
cool.
these kind of things. So I'm really excited for this, and I'm just yeah, that's just leading into the next topic. I'm just also really excited for all the end of the year things that are coming out. You know, like I can't wait to see people's thoughts about the year and people's portfolio performance this year, etc., etc.
Yeah, cool. The first topic was interesting. I'm blanking on it right now. What did you say again? It was interesting. What was the first one? It was
You mean
can you
the
help me
bridge
out?
between Solana and Phantom?
No, then the second one?
It was Messari's end of the year crypto thesis
Hmm.
for
Man.
2022.
Okay, then I might mix it up right here. Damn, I missed my train of thought and man, I was about to ask you a question. Did you say something be before the bridge one?
I don't think so, but
Huh?
it's okay. We will, it will occur to you a bit later on in the discussion, I think.
Yeah.
So I suggest we move on to what excites us, and then I'll continue for that one. So what excites me is first of all, Grayscale announced that they will have a Solana trust.
Hmm.
So I think this will, yeah, of course, be a huge catalyst for the Solana token. Um, yeah, for the rest, I've already mentioned it somewhat, but I'm starting to really look into other chains and see how their yield there compares
Hmm.
to Solana in terms of yeah yield after transaction costs. And
Hmm.
the third thing I want to dive more deep in is Terra, and in particular the Astroport and Mars tokens. So these are the
Hmm.
two new protocols, and they are incubated by Delphi. And Delphi is really putting in a lot of effort to make them really good because Delphi is basically turning from like giving advice to becoming their own little, developer of protocols.
Hmm.
So they really want to make it really good. And there was a podcast on the Delphi podcast where they explained the tokenomics, and they are quite interesting and innovative. Like they're really refined in terms of yeah the tokenomics. So
Hmm.
I'm definitely considering. I want to learn more about it, and if so, I want to maybe start also investing in these two tokens, or at least one of them,
Hmm.
at least as support, which is a DEX.
Hmm. Um, can you explain a little bit more about those two projects? What they are trying to do? Are they a simple DEX or is there something innovative about it?
To be honest, I'm blanking on the Mars one. I know that these two protocols they are interconnected, and I know that
Hmm.
as support is a DEX, and what makes the DEX pretty interesting is that first of all there are no good DEXs yet on Terra. So
Hmm.
there's, I think, Terra Swap, which is, I think, the biggest DEX, but it is horrible. So I think they could easily gain traction with regards to that. And
Hmm.
also, this is a DEX where they're trying to align the incentives for the people who swap and the people who provide liquidity uh, to make it so that you can't just be a parasite basically on the DEX. So
Hmm.
I think roughly the tokenomics are in such a way that it's relatively a little bit like the sushi model, where if you do a swap, you get 30 basis points swap fee, and then 25 goes to the LP. And
Hmm.
no, I think I'm not sure if it's 20 or 25, but I think something like this. And then 5 goes, of course, to the X Astro port holder, just like you have with the X sushi. But
Hmm.
then you can also stake the X sushi kind of um, in like a curve kind of model. So you get extra voting power, but mainly you also can get to vote where you provide the incentives for which pairs and stuff. So
Hmm.
um, you have an extra benefit as an LP to hold the token because not only do you get the 5%, but you also get an extra 5% on the swaps if you are like a staker of the X support. I think it's
Hmm.
something like this. Don't hold me to it because my research has been
Hmm.
just preliminary. I just heard a podcast on the way here.
Hmm.
So that's why I want to dive deeper, more deeper into it to understand it more closely.
Hmm. Yeah, those protocols they get quite complex right now. I know that you are pretty excited for the curve ecosystem as well, right? With the whole convex thing.
Yes. So they intend to make this like the curve of Terra,
Uh,
because what will happen is that protocols themselves they will want to provide liquidity on Astroport, and because they need to have voting power, they will lock the token to vote themselves incentives, just like you
mm,
see with Curve and Convex right now.
mm. Yeah, this is a topic I'm not that deeply into it. I follow some guys who explained it a couple of times, but I'm not at a point where I can understand the whole mathematics. For me, it does make sense, there are some downsides, obviously. For example, you have to lock your convex tokens up for multiple years to gain more rewards. But yeah, why would you or do you even um start with looking with taking a look at Luna and Phantom at the beginning to go into other chains, or will you take a broader look like Harmony and all the other things that are out there?
Yeah, so I will start with Phantom and Terra, and then I will reach out to others. But since, yeah, I have limited time, so what I did do last week, I tried like 20 protocols on each chain. So I tried like 20 on
Wow.
Phantom, 20 on Avalanche, and 20 on Terra. And I want to try some more, I basically want to go to the whole DeFi Llama and go to every page and,
Mm,
try every token, but it's just very time consuming. And also because I want to compare the yields, it's going to take me a while to do this. So my expectation is in the short term, focus on Phantom, trying to analyze the yields there, and then move on to Terra, and then try smaller chains.
mm,
But I mainly am interested in smaller chains where the gas price is really low. So
mm,
even Avalanche is, I'm a little bit priced out of it right now with the money that I have to yield farm with. It's not a huge amount at the
mm.
moment. So I prefer to have even cheaper chains than Avalanche.
How much does a transaction cost roughly on Avalanche right now?
I think it is like 80 cents
80 cents for a
for
token transfer or for a deposit or a withdrawal?
um, I think it's 80 cents for a swap.
Okay.
And I think roughly, but these are just rough numbers, eh? So I think for Phantom it is less than half of that, and also for Terra it's less than half of that right now. Um, yeah, but
Yeah, for
ideally I
Phantom
would like
it's
to go even cheaper because Solana is way cheaper, of course, than these two. But
yeah.
yeah.
Yeah, Phantom is super cheap. Phantom is like 1 or 2 cents or so. And yeah. Okay, okay. Maybe you can let us know next week what are your essences out of this.
Yeah, sure.
And yeah. Do you want to dig into any of your topics or do you want to hear my topics?
Now let's move on to your topics.
Um, I did hear some interesting takes. I would love to hear your opinion about. And yeah, so the first take was basically like this. So there is this research firm slash media outlet which is called The Blocks, and they have their VP of research, and he said basically that he's pretty confident that governance tokens will be labeled as securities. And if we all take a look at our portfolio and we reflect, do we hold governance tokens? And most likely the answer is yes, quite often. And do we think there is a chance that they will label as securities? What does this mean for our portfolio? Does this should this incline us to do something? What do you think about this?
Are you then talking about the US that are labeled as securities there?
Yes.
Yeah, I used to be very concerned about these kind of things, but lately I've grown less and less concerned about it. I personally think the US, um, you know, they can't make too big of an impact, like such a big impact in crypto anymore, because you're already seeing that a lot of new protocols are blocking the US, for instance. And if you look at the worldwide distribution of portfolio value, it is not, it's not more than 50% US, it is still like a significant chunk US, but like the rest of the world is way bigger than US in terms of crypto. So I actually think we can do fine without the US. Of course, if this kind of regulation spreads to Europe, which it probably will in a couple of years, then of course I'm starting to get more bearish. But even then, you still have Asia, where they probably will have a different regulation than in the US and Europe. So even though I think it can be definitely short term very negative because of the sentiment, I think the actual effect will be relatively diminished. I think crypto has reached a point where it has gotten like a little bit of an escape velocity, where it can, yeah, it can withstand regulators that are antagonistic against it.
I kind of disagree. Um, let's take, for example, so you could argue that the hash rate uh, recovered. So to paint a picture, um, when China decided to ban Bitcoin mining, the Bitcoin hash rate dropped by 50% roughly. And since then it recovered. But you can also argue that the hash rate got up because the price got up. And so the miners are transitioning from China to other places, but this takes years, years. And there will be less miners overall. So the market of miners has declined quite substantial. And my theory is the following. Let's take, for example, that let's take Illuvium, for example, right? We have no idea what's the allocation of the Illuvium token overall divided by countries, right?
No.
Okay, let's take a rough estimation. How many people inside the US, oh no, out of the 100% who hold ILV token, how much do you think come from the US? If you have to
If I
have
were
to
to
take a
make a
guess.
guess, I would say 35%.
Okay. Imagine that those 35% are forced to sell and can't buy back in again. Do you still think that's short-term bearish and long-term bullish?
I think out of the 35%, maybe a good amount of them would use like VPNs or other ways to circumvent it. Or and the ones that are really big, they will probably just move to somewhere nearby, like either Puerto Rico or maybe where FTX is headed. So if they really have huge bags and they can really influence, let's say they have a huge bag of Illuvium and this regulation will come out, I think they will simply move because their bag will be so big that moving is way easier
Do
than.
you think they will move their living location because they have ILV bags?
I mean, if they have big ones, like let's say they have more than, like let's say Illuvium is more than 50% of the portfolio, and they have more than like a million or something. I think they'll move for the 1 million for sure.
Okay. And the other 34.9% out of the 35?
Yeah, well, I think they will sell it, and then it will have some downward pressure on the price for sure. I think, of
Mm.
course, it will have some downward pressure on the price, but I don't think it's long-term damaging. Like what will happen is that people in Australia and Asia are like, oh wow, I get to buy it at a discount. Let me pick it up
Mm.
because they are the Americans are their forced sellers, right? So it's a really good opportunity to sell to buy from a forced seller.
Mm. Yeah. Yeah. Mm. Mm. I'm thinking about, so this is your opinion, this is my opinion. I
Mhm.
think we disagree. I'm thinking about, was there a scenario where we can take a look where this happened? I'm thinking about DYDX, but DYDX, they distributed their token, and the US participants they were cut out from the beginning, so it was not like at halfway they got cut out. Can you think of anything where a token lost roughly 30 to 50% of its participants due to some external effect, and we could take a look at how the price evolved since then?
I can't think of anything, but I do know that people who got wealthy in crypto, and also a lot of protocols, they are moving out of the US right now. So I think, as the world becomes more digital, the barrier to swap locations will be a lot less. So you already see right now that a lot of protocols are leaving the US to go somewhere else where the jurisdiction is better. So I think people with big bags, they will move if the climate becomes too negative for the US in the US.
Hmm.
And you can
Hmm.
already see this because, like, where do the richest people live in crypto? Like, you know, they live in like the
Hmm.
Seychelles and stuff, right? And in Portugal and all kinds of things, or Cyprus,
Hmm.
basically places where the taxes are, benign for crypto.
Yeah. Yeah, I think we can have a pretty long discussion about this. I could bring some counter arguments to this, but I think in um what is it called? In regards to time, I think it's a better discussion for a longer podcast, basically. But this is something I'm thinking about. And if I'm exposed to this risk, how exposed am I to this risk? And what does it mean for my portfolio? Which is something I wasn't thinking about deeply enough, to be honest. And yeah,
But you're pretty much not exposed, right? Because you have like
yeah, yeah,
95% BTC and
yeah.
ETH.
That's really good for me actually.
So
But I'm exposed to a similar risk. but pretty small. So I'm exposed to the what if the US regulation says that ICOs are securities. And there was this Fed chair a couple of years ago. He said that BTC and Ethereum are no securities, and he left it at this. But this is a couple of years back, and yeah, Solana I'm exposed, I guess. And yeah, but this is a different discussion, but not something which is totally irrelevant for me and for you as well. Yeah, do you want to move on to the portfolio challenge, or do you want to hear another interesting thought which crossed my mind?
Well, you make it pretty sound pretty enticing now. So, what is the thought that crossed your mind?
Okay, the second one is the following. There is a lot of money out there, a freaking shit lot of money in the bond market. And the bond market is basically like buying US treasuries, 20 plus year treasuries, stuff like this. And you get a super small yield out of it. And there was this concept. I heard it from, where was it? From Raoul Paul or so. So a big macro thinker, basically, for those guys who don't know him. And he basically said the following. He said that staking will be an alternative to buying bonds. And staking, so let's take Ethereum staking, for example. You basically get between 5 to 20% guaranteed APY, so yield per year on your Ethereum, obviously paid out in Ethereum and not in US dollar. And the thinking that staking could become an alternative to bond buying, got me super interested because from my naive point of view, I, I see that buying bonds is a $1 trillion market, and even if a small percentage out of those people are taking the bet that they want to diversify or go into alternative yield strategies, staking could be an alternative, and this got me pretty excited. What do you think about it? I think you're pretty more educated around this area than I am. Does this make even sense, or is this not an alternative?
Um, yeah, I'm kind of struggling with this because I think, of course, staking it is very appealing in terms of the yield that you get from it compared to bonds, which are mostly a negative or extremely low. Um, at the same time, I do think for staking you do need you need to have like a setup, right? You need to either do it yourself or have another protocol do it for you. So I think the more forward-looking banks and maybe even retirement funds, they will probably enter staking with a small amount, and then it will start growing a lot. So I do see that because the bond market is so huge and the treasury market is so huge, staking a little percentage of that will have a huge effect in staking. So I do agree with that. But at the same time, these kind of institutions are extremely extremely conservative. And the
Yeah.
reason why I'm saying this is because I actually was in a webinar with some people who actually buy the no who actually sell the bonds, and they they mentioned that. So I asked them, don't you think you're going to get disrupted by crypto? And yeah, they were not impressed at all by it. So I think this kind of world, the bond world, is also really old-fashioned at the same time and
Mm.
resistant to change. So you shouldn't underestimate how
How stubborn people
how
are.
stubborn and how laggy these systems are basically.
Yeah.
So I
Fair
think
point.
yeah, theoretically, of course, they could make huge gains if they were to stake instead of what they do right now. But there's so much friction in the whole system that it may take still years before it really catches on. I think some of the
Mm.
most forward-looking banks, I think some Australian banks or something, and of course like maybe like Goldman Sachs or
Commonwealth Bank did it.
yeah, I think Commonwealth Bank did it right. So there are some banks that are really forward-looking and will do this, and probably also like Revolut, for instance. But I think most of the huge banks, like Deutsche Bank, for instance, I think they will be laggards in this regard.
Mm.
So yeah, it could take a while, unfortunately.
Mm. Yeah, I think it's kind of. Oh, I hate this. I hate this word so much, but I will use it right now. But I will put it in quotes. I think it's kind of inevitable that they will do it. But I don't know if it's irrelevant or relevant for now. Um, yeah, I agree mostly with what you just said, and yeah, it was just an interesting thought that came to my mind or on my radar.
Yeah, it is inevitable, but you just don't know the timeline. So
Yeah,
it
exactly.
could be
Yeah,
a long time from now.
yeah. Okie dokie. Do we want to transition to our last topic, to our portfolio challenge, or is there anything else that you would like to discuss?
No, let's go to the portfolio challenge.
Okie dokie. Do you want to start? Do you maybe want to recap where your portfolio was last week, what you did, and where your portfolio is right now?
Sure. So just to recap for the new listeners, we started at 5 Sol, and that was 4 podcasts ago. And basically last week I was at 4.95 Sol because yeah, I made some bad trades, I guess, or my yield wasn't that great. And my dollar value last week was $1,071 roughly. And now my value is 1145.20. So I gained about $74 in this week. And also I gained in terms of Sol terms, I went from 4.95 back to 5. So I'm kind of back to where we started in Sol in Sol
Yeah.
terms, even though in dollar terms I'm up. So what about you?
Um, yeah, so for me it was quite interesting. So I started this journey as well as with 5 Sol. Then the second week or so it dropped to about 4.96. Then I lost massively and it dropped to 4.72. So I did a pretty good job of underperforming, holding Sol and playing tennis basically. But over the last week I doubled down on yeah, just don't. So my theory was basically the following. What if I try to minimize the swap fees I'm having and the transition fees and stuff like this and just put it into a farm which is giving me pretty good yield on Sol and I don't have to do anything. This worked out pretty nice. So last week I was at 1020. This week I'm at 1116. So I gained $96, mostly due to the appreciation of Sol price. But my Solana value, it increased from 4.72 to 4.87. So I gained 0.15 Sol. And yeah, I think this is quite interesting because this is a learning I get out of it. So over the last couple of 2 weeks, I tried to time the market from week to week. I was thinking about, okay, do I think that the market will be short-term bearish, short-term bullish? Will there be volatility? And if so, if there is a lot of volatility, where is the volume going? So I will get more in regards to swap fees. But this short-term thinking stuff, it got me kind of yeah burnt out is the wrong word, but it it nailed my focus on short-term thinking, short-term negative thoughts, and yeah, I do feel quite more comfortable if I just stick to my macro thesis of a number go up because macro go up, and this means Sol go up, and I have no idea right now how to outperform Sol, so I will stick to my approach right now to do as little swaps as possible to build up my Sol portfolio as much as I can without having much swap fees and without having much impermanent loss. So right now I'm looking for ways to yeah basically farm more Sol without having some short-term thinking. Like for example, to give you a more concrete example, so the first week I was thinking about okay the market is quite bearish. It would be good if I diversify a little bit and sell half of my Sol holdings and get into stablecoins and BTC to be able to profit from a setback. The setback came. I wasn't at my laptop, and basically when I got it at my laptop, the prices were higher than I was where I left it, so it backfired on me. So I will do the following, which is the TLDR. I will try to pick farms for the next couple of weeks, where I basically feel quite confident that I can stick to them, so I don't have to pay high swap fees, and I basically try to build up my Sol portfolio allocation week by week. And if I see some, we call it alpha, and alpha is something where you can outperform like the beta, and beta is basically holding Sol and building up Sol. I might get into it, but it really needs to get me excited. Right now, I don't see anything. I don't see any protocol where I'm super excited about. I don't see any yield farm where I'm super excited about. I tried some leverage yield farming, and I tried some uh, options protocols where I bought options, sold options, and stuff like this. But that's nothing that got me too excited. So yeah, this is maybe my go-to approach from right now to stay into farms where I can stay a little bit longer into, because the swap fees they will hurt your portfolio really substantial if you pay yeah 0.30% on your whole portfolio just for a single swap, and I underestimated this a lot. Yeah. Any
Uh,
comments about this?
yeah, so I'm very curious where you invested your soul last week. Which
The
farm?
last week, I put it into Francium
Hmm.
and or Francium. Some people call it Francium, some call it Francium, some call it Francium, and different names. But just Google Francium Solana, and you will find it. And I got into the max leverage position on the MSOL Sol farm, which got me about 25% APY. So you can leverage up your portfolio
Hmm.
to 6x leverage. I basically put everything in there. And yeah, I let it sit in there. It's ranging between 25%, 28%. And yeah, I earned a couple of bucks out of this. And yeah, I also got into yeah, some smaller things where I am experimenting right now with leverage yield farming, which got me super interested. And I do have quite a small position in there with a leverage yield farm, which basically paid out quite nicely, even more than the 6x leverage farm on the MSOL soap farm. But it's speculation for right now. I just want to make sure that I understand the dynamics. Um, if you read a little bit up onto leverage yield farming, you can play some really interesting strategies with it. And yeah, this is mainly what I did. So I put it mainly into the MSOL Soul farm on Francium, pulled the trigger to leverage to the maximum to 6x. I will get about 25 to 30% APY on my Soul, paid out in Soul. And yeah, the other thing is that I do some degen and quote leverage yield farming for some other things, pretty risky, just to get a little bit more educated about leverage yield farming. You can basically go long and short with leverage yield farming, so it's not that you can just go short or just go long. There are some pretty interesting dynamics.
Okay. Um, and also disclose a little bit about what I did. So I'm a little bit puzzled how you performed so well. And I theoretically had probably higher APR farms, but I performed less.
Yeah, you have
Uh,
swap fees, right?
yeah, so no, well, I didn't really swap that much though. So I started well, the first
The
thing was
permanent
that
loss.
I was a little bit busy last Friday. So when we took the snapshot of the portfolio and I unstaked everything and removed everything, I didn't enter a new farm until probably like Saturday evening. So maybe I
Mm.
already had like like a 1 day of not getting any yield. And then I put it into an FTT USDC Radium pool. Because it came to yeah, it had a really high APR, historical APR on that day basically. Um, but in the end, after I entered it, so the APR went before I entered it was like 100% or something. And when I entered it and I calculated it the next day, the APR that I got was around 30% only. So
Mm.
it must have been like a spike, where someone has wanted to swap a lot of FTT for
Mm.
USDC or something. So I was like, okay, this yield is not that great anymore. I
Mm.
need to swap it somewhere something else. So then I put it in. I put it back into Element, into the I think Serum USDC pool, and I was in that for a little bit, and then yeah, the yield still was a little bit like a bad in my view, and also I couldn't, Element is like a huge shitcoin, it depreciates so much, so I got really concerned that it would drop. It can easily drop 20% in 1 day.
Yeah.
So I was thinking, yeah, the market isn't looking that good. Maybe um, I should get out of this and get into a better farm because on Jupiter you can only sell your element if you have a certain amount, and the amount that I was getting with my yield was so low that I couldn't really sell it yet on Jupiter or swap it for Sol or something.
Oh.
So I had to save up multiple days basically to swap it. So then in the end I went to Sol Yard, Sol Radium pool. Um, yeah, and there the APR it should be high. Like theoretically it should be like between 70 and 100%, but Yeah, I'm still a little bit puzzled why my performance is so low because I didn't really do that many swaps, but I did do a lot of entering and exiting borrow
Yeah, but
lending
this.
protocols. So I did do a lot of
Ah,
transactions, like maybe like yeah, a lot, like more than 20, because I had to
ah.
get in and out, unstake, unpool, restake,
Mm,
repool, etc., etc. So maybe this is
mm.
what caused me.
Yeah, it could be that you opened up a lot of accounts, so whenever you do a trade from one token to the other, you basically have to rent an account on the Serum DEX. And it could be that you actually have 10 open accounts and you can get 0.001 Sol or so back, and this could add up to 0.05 Sol, and yeah, maybe something along those lines.
Okay, that's interesting because I swapped a lot of different tokens, well, at least 10 different tokens
Yeah,
in my time
yeah,
in Solana yet
you
so
have to
far.
open up an account every time.
Oh, wow.
Yeah,
Okay.
maybe you can check later. It's
Yeah.
the one on Symmetry where you can close your accounts.
Hmm.
And there's even another solution right now. I'm blanking on the name right now, but there's this guy on YouTube. He's called Wales Friends, and I like him. He's super, super funny. Super weird, but super funny. And he showed this website, which is basically a bulk close accounts. So you can click on, okay, I have 27 accounts open. Please close them now all immediately. And he got like zero point 0.5 Sol or so back because he was trading a shitload.
Oh my God.
And no, even more. He got two Sol back, two Sol
Wow.
because he had multiples open, and yeah, but he's in Solana for
Yeah, yeah.
more than half a year by now. So yeah, maybe this is something that we need to take into consideration next time we do our portfolio allocation. Check if we have some open accounts because this dilutes our results quite heavily.
Yeah, very
Because
good
we have
point.
such a low yeah account portfolio. 5 Sol is, yeah, what is it? $1,100. It's not that yeah. We,
Yeah.
we we may take it into consideration.
Okay. Yeah. Really good point. Like the 5 soul limit really makes you like it's really real like a challenge, to really get decent
Yeah,
portfolio returns on this amount.
yeah. Okie dokie. I think that's it for now, from my point of view. Do you have anything else that you would like to discuss, that you would like to tell listeners about?
No, I think this is it.
Okie dokie. Yeah, then perfect. Next week is a normal week, and we discussed yesterday evening that the Friday, the 24th, is Christmas, and we don't do a podcast on this day. We will launch it or record it one day earlier. So on the 23rd of December, we will release it, and yeah, we will spread it out. And yeah, that's basically it, guys and girls. Stay safe, stay healthy, stay happy, and yeah, see you next week.
Bye.
Bye bye.